Good morning. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary, and for the next 30 minutes, we'll take all your stock market related questions and get our experts to answer them for you. Before we begin, I'd like to remind you that you can send in your questions through any of our social media channels or through the WhatsApp number that's on your screen right now. You can also write to us through the YouTube live chat. Now, before we begin, let me introduce you to our guests for today. We have with us Mr. Avinash Gorakshakar, Director, Research at Profit Mart Securities, and Mr. Kunal Rambhia, Founder of The Street. Welcome to both of you, and it's a pleasure having you both on the show this morning. Now, before we move into the questions, let me start off with what's in news today, which is the crude prices that has been falling and its impact on Indian equities. Now, the oil prices have fallen below the $80 mark and are lowest in the last 3 months. Now, this also means that the concerns over demand in the US and China are waning, and also supply disruptions that were previously predicted due to Israel-Hamas war are also now kind of on the lower end. Because of this, Indian equities like BPCL, HPCL, and all the other downstream oil companies are in focus. So let's take a look at the HPCL and BPCL stock prices that have been gaining in the 9 consecutive sessions. HPCL is up about 18% in the last 1 month, while BPCL is up about 14% in the last 1 month. Now, it's important to understand how lower crude prices impact these OMCs. There is a positive impact on the profitability due to decrease in price of raw material. But let's take a view from our experts. Let's go to you, Avinash, first. How are you looking at this rally? Do you think this is going to continue for the long term, or it's a short life rally that we're seeing in Indian equities especially?
Yeah, I think one thing is very clear that crude prices have turned soft, and that is the key reason for the upside in almost all the oil marketing companies like HPCL, BPCL, IOC. What lower crude price does, as you rightly pointed out, is that crude is a key raw material, so the gross refining margins of these companies get better. But I think this is going to be momentary. I think if the Israel-Hamas war continues beyond December, then I think we could again see a spurt in oil prices, and that could obviously upset the GRMs for most of these oil marketing companies. So I think it's a quarter, maybe another 1 quarter, where we could possibly see the benefit flowing in. But I think we'll have to review and look at crude price quite, very closely. More importantly, with 5 state elections lined up this month, and obviously next year elections, the propensity to increase prices despite this sector being deregulated is also a big question mark. So normally, whenever elections come in, the government does not allow these companies to raise their product prices. So I think you'll have to take a short-term view, look at the crude prices very closely on a regular basis, and then take a call. But I think next couple of quarters at least, it looks these companies should do better. Hopefully, if crude prices settle around $80 to $85 a barrel.
All right. Let's take a view from you, Kunal, as well. How are you viewing oil companies currently?
Good morning. So if you look at the overall formation on the price action, yes, certainly the crude oil prices have come down, but at the same time, if I look at the BPCL or HPCL as a counter, they have already rallied by almost 18 to 19% by now in the last 10 days or so. When if you look at the broader formation on the charts, since Jan 2022, these counters have not shown a new high. So if I just speak about, say, BPCL, I think the counter took almost 5 attempts to cross 395 to 400 mark, but it was a failure. See, recently again it made a high of 390 in today's session. Now it's taking a breather at the same level. If I talk about HPCL, it's almost the same formation there also. The counters have not really made a new high. So I would not really be keen to add the counters or the positions at this point in time. I'll wait for these counters to show me at least a 52 weeks high. Then I would consider that to be a breakout. If someone is already holding the position, it would be advisable to trail the stop loss and book the profits if the stop losses are triggered. I think this is just a kind of momentary for time being. We'll have to see how the prices shape up going forward also.
All right. The first question that's coming up is from Rajesh Maheshwari, and it's on one of the oil companies, which is MRPL, that's Mangalore Refinery and Petrochemical, and he's holding he's holding 600 shares at an average price of 73. He wants to know if he should continue holding the stock, or is it a good time to book profits considering the share price has been rising? Avinash, what do you suggest in this case?
Yeah, I think if you look at the quarter two numbers, the numbers have been extremely robust. In fact, in terms of top line, in terms of operating EBITDA and the profit at the net level. See, my guess is that if crude prices continue to remain around 80 to $85, then even the third quarter is expected to be pretty robust. And I think clearly, as I mentioned earlier, that it looks very unlikely that crude prices will shoot up immediately. But definitely over the next 3 to 6 months, if he can hold on, he could expect a further re-rating from his cost price. I would suggest him a hold and take a at least a 6 to 8 month view, because technically speaking, if crude prices remain at these levels, then I think MRPL is definitely poised to get further re-rated.
All right. Kunal, Rajesh also wants to know that first, give us your view if you should continue holding the stock or if you should exit. And they also want to know if it's a good time to exit, at what price should he exit the stock?
So again, if I look at the MRPL as a price action formation, then on the weekly chart, what I can see is this counter made a high of around 115 to 120 somewhere in the month of June 2022. Now the counter has reclaimed the same level as of now. If I zoom out of the chart and look at last 15 years charts, then somewhere in 2007 and 8, this counter made a high of around 120 to 145, declined, reclaimed the same level somewhere in September 2017-18, made a high of around 140 and it declined, and now it's trading at around 115. I would consider this 120 to 140 zone as a very critical zone and a resistance zone where the counter has multiple times taken resistance and it has declined from the same level. So the advice would be to continue hold as of now. But if the counter, somewhere you find that the counter is struggling near to 120, I would say book some profit, take out some money out of the counter, and wait for the consolidation to happen near this zone. If the counter manages to cross 125, 130 decisively, then we can definitely re-add the counter. But at this point in time, no fresh entry. And if you are holding the counter, make a proper stop loss and hold with that particular trailing stop loss.
All right, fair. Next, we have a question from Navadeep, and they're talking about Infoedge. Now, Infoedge came out with its results yesterday, and they reported a 4% rise in revenue to 626 crore, even though there was weak growth in terms of billings due to weak hiring in the IT sector. Let's take a fundamental check on Infoedge. Avinash, how do you view Infoedge for the longer term? Is it a good stock to hold?
Yeah, I think my guess is Infoedge is definitely a very good business, largely because they nurture startups, and obviously they have a lot of hidden intrinsic value on their books. But I think if you talk about the earnings growth of this company, my guess is that it is more of a holding company, and obviously its investee companies, some of them are in a very initial kind of growth stage. So I would believe that unless an investor has got at least around 18 to 24 months of time frame in mind, only those investors should hang on, because in the very near term, earnings growth is not going to be very significant, and that is unlikely to re-rate the stock. So from our side, it's a hold. No fresh buying suggested at the current levels.
All right. Let's take a technical check on this as well. Kunal, how are you viewing Infoedge?
So this counter has decisively managed to cross the previous highs of around 4,550 kind of levels. Right now it's trading at 4,600 kind of levels. So I think this momentum, which is already seen on the counter, may just continue for a while. The levels to watch out for will be, say, 4,750 to 4,800 kind of levels. And once it reaches that level, we'll just revisit the counter and we'll take a new fresh view. But as of now, certainly bullish on this. The trading stop loss which I would recommend on this counter will be 4,500. Hold with the stop loss of 4,500. I think on the higher side, 4,750 to 4,800 can be the likely target.
All right. We have a very interesting question coming up from Girish, and he's asking about the impact of elections on the Indian stock market. He wants to know what's a good theme or even particular stocks to invest in terms of for the longer view for 1 to 2 years. So Avinash, what are your picks and what sectors and themes do you think may get impacted with the upcoming elections?
I think elections are definitely very unpredictable, but past history has proven that 6 months ahead of the general elections, the markets have rallied by at least 20-25%. So I think markets obviously go on the narrative, and finally once the results are out, I think the market gets further re-rating. So I think sectors which are going to get impacted are obviously the global sectors like IT and metals. We continue to be positive on the domestic sectors. And if you were to ask me that which sectors the investor should actually accumulate over the next say 2 years, would be obviously auto components, capital goods, and real estate. We believe all these sectors have got strong earnings growth kind of trajectory potential, and that would definitely help the investor to add and generate a lot of wealth despite the volatility you could see in the next 6 months due to the elections.
All right. Kunal, what are your thoughts on this? What stocks and themes are you looking out for considering elections?
See, again, we give a lot of importance to the price action, and so for now, I think these counters, the frontline counters, which have not really rallied too much in the recent times, one can look at those counters. On the infra front, I think the L&T is the best counter which we can look at for next 2 to 4 months time, and certainly the leading banking counters. Obviously, it has nothing to do as such directly with the elections, but these counters haven't rallied much. And if we are expecting a good rally in the markets pre-election, then certainly these counters can be a really good performer. So the best pick can be, say, ICICI Bank, HDFC Bank, which are offering good risk-reward ratio from longer-term perspective, and anyway, available right near to the extreme lows of 2 years. So these counters can really be good fundamental pick, even based on the technical parameters of risk-reward ratio.
All right, fair point. Let's take another question from a YouTube live chat, and this is from Pratik. They bought Bank of Baroda at an average price of 122, and he wants to know if he should book profits in the stock. Now, there has been some controversy around this stock, especially. Avinash, how are you viewing this for the longer term?
Yeah, I think you're right. Bank of Baroda had some issues regarding their mobile app application, and I think they were given directives that new clients should not be onboarded there. But if you see the Q2 performance and the management commentary, I think the bank has reported very strong, robust set of numbers, both on the asset quality side, on the disbursement side. With credit growth almost in double digits as of now, we believe that the second half will be a very strong period for the bank, both in terms of corporate capex as well as retail demand. And my sense is that they've entered at a very attractive level. So if they can give in another 6 to 12 months, I think Bank of Baroda definitely looks poised to do well. It's one of the top 3 PSU banks in the country, and I think now asset quality issues have become something of a past. Their books are pretty clean, and demand is pretty solid. So I would suggest that they should hold on for the next 6 to 12 months. We could expect a decent upside even from the current levels.
Kunal, do you hold the same view as well? Even though the stock has been down 9% in the last 1 month, do you think it's a good time to exit, or should they continue holding the stock?
See, again, our viewer has taken our entry at near to 120 levels, which was somewhere in the month of August 2022. So certainly he is comfortable, seems to be comfortable holding the position for a long period of time. If I look at the weekly charts, the trend is certainly positive, making a clear high top higher bottom formation. A recent correction in the Bank of Baroda, I would not really consider that to be like a stock specific correction. Entire PSU banking segment saw the correction, but in this correction, the counter has been sideways. It has not made a new, the emergence of a new downtrend. In fact, at the present level, I'm very keen to add new positions also on the same. I'm just waiting for the momentum to pick up and the counter crossing around 200. I think that can be the good level to add fresh entry into the counter also. So certainly to our viewer, it's an advisable thing to hold the position. Keep the stop loss of around 185. If the counter breaks 185, please revisit and ask any person who is available with his best knowledge. Probably you can take an exit. But till then, hold on to the counter. I think there is much more room on the upside.
All right. Now, viewers are really excited to know your Diwali picks. Now, I know we've already discussed a couple of themes and stocks with the election question before, but if there are any specific stocks that you're focusing on and would recommend our viewers to add this Diwali, Avinash, let's go start with you first.
Yeah, I think two sectors which we like are automobiles and real estate, and within the auto pack we like Tata Motors. We believe that the second quarter numbers was much ahead of street estimates. The company's management has also clearly said that they would be generating a large free cash flow now going forward. And plus, Tata Motors would also benefit from the value unlocking from the recent now forthcoming Tata Technologies IPO. So both the commercial vehicle business, the passenger car business in the domestic market, and the JLR business has taken off very well. We believe that over the next, say, 12-15 months, you could look at a target price of 750. The second stock which we have been advising our clients is a real estate company called Anant Raj. It operates in Gurgaon and it's got an excellent product mix considering the fact that they have entered the data center business also. We believe the data center business can be scaled up significantly over the next, say, 12-15 months. And I think numbers reported have also been extremely robust. So I think apart from the numbers, the kind of projects they've announced almost 4 new projects which could possibly give in a lot of revenue visibility over the next 12 to 18 months. So here also, I would believe you could look at buying. It's currently trading at around 248. We have a target price of around 330 here over the next 12 months.
All right. Kunal, what are your Diwali picks? What stocks are you constructive on?
See, we have always been focusing a lot on the risk-reward ratio and the counters or say sectors which are really not performed in the past, but offering good risk-reward. I think that can be a good pick from the long-term point of view. So considering that, I think we have recently shortlisted the entire diagnostic space. And among those counters, the first is the Metropolis Lab, available at 1585. I think this counter with the minimum downside is offering very good risk reward ratio from the positional point of view. One can expect at least 20% upside from the present levels. The second is Dr. Lalpath Lab, again from the same sector. Counters are hitting near 52 weeks high. But if you look at the overall, the last 2 to 3 years performances from the extreme peaks of those COVID time era, the counters are still available at pretty much discount. So the second is Dr. Lalpath, where we can again expect at least 20 to 25% kind of rallies. On the infra front, we have the best pick, which is one of the favorite picks, and that's of L&T. Counter is gaining continuous momentum. It's making good higher to higher bottom formation. I think from the present levels, still 15% kind of upside can be expected on the technical front. So these are the 3 counters which we are, as of now, recommending to our clients also.
All right, there you have it. Thank you, Kunal. Thank you, Avinash. It's always a pleasure having you on the show. And viewers, thanks for tuning in. We'll be back tomorrow, same time, 11:30 a.m. Stay tuned to BQ Prime.
Wishing all the viewers of BQ Prime a very, very happy Diwali. We wish you that this season you get the most happiness and joy in terms of everything which you do.